Thank you once again to Forrest, Lynn, Surendra, and merci encore, Benedict, absolument superbe comme toujours. Now, ladies and gentlemen, HSBC is the hometown hero for Hong Kong with the greatest global reach of any Hong Kong bank, so it gives me a special little bit of pride to welcome to the stage today Mr. Surendra Rosha, who is a group executive and the co-chief executive for HSBC Asia Pacific, with a little video to bring him in. Let's have a look.
張匯豐易通財卡啫。
如果你喺匯豐開有戶口，就可以免費申請張易通財卡，咁就24小時都攞到現錢。只要將卡放入電腦，打出你所需要嘅銀碼，現金即可到手。
話攞就攞，易到單手都搞得掂。請人，
匯豐易通財有如袋中錢。
Good morning. That was 1980 when the ATM came to Hong Kong. My name is Surendra Rosha. I'm the co-chief executive for Asia Pacific for HSBC. And we've come a long way since the ATM made its first appearance. Today, it is a privilege for me to talk with you about how we see the next phase of the digital evolution of financial services. I will speak from the perspective of a bank that is traveling the road of digitization, from the perspective of a bank that remains a critical component of the global financial system. There is no question that new technology has made access to financial services faster, cheaper, and easier. For HSBC, our journey in digitization really started in 1967, the year when our first computer, an IBM 360 mainframe, arrived at our head office in Hong Kong. As you can see from this image, just getting it into the building was a major effort. It had a maximum of 8 megabytes of main memory, but the IBM 360 changed how we did banking. By 1980, you could manage your account with any branch of HSBC in Hong Kong, not just the branch where you'd opened your account. And we've seen many cycles of digital transformation since the 360. And now there's a new wave underway in financial services that is energizing economies around the world. Sometimes this journey does feel like a hike through the mountains, or if you're on the MacLehose Trail, where you get to one peak, and then there's another one behind it which you need to scale. So in the years following after the global financial crisis, we've seen technology accelerate and disrupt financial services, particularly the payments landscape. We heard earlier a lot from companies that have played a big role in that space, and I'll talk about it a bit from the perspective of HSBC. We are seeing digital payment adoption being nearly universal in many countries now. 57% of the world's population has either received or made a digital payment this year. Of course, China and India are the poster children, if I could call it that, for this revolution. And this has brought costs down for the consumer. It's made e-commerce infinitely easier and more efficient, and really brought more unbanked into the formal economy. Cashless transactions have posted exponential growth and are projected to reach $3 trillion by the year 2030. And all of us as consumers are losing our sentimental attachment to paper money. And the process is accelerated. Even in Hong Kong, payments processor FIS forecasts that physical cash and coins will account for no more than 1.6% of point-of-sales transactions next year. Of course, at HSBC, we share a sentimental attachment to paper money because we have our name on it in most of Hong Kong. When we look at frontier economies beyond the emerging markets, they are also catching up very quickly. In fact, technology is enabling them to leapfrog a generation and move forward. In sub-Saharan Africa, 33% of adults today have a mobile money account, and that compares just to 10% globally as an average. So financial digitization is here, and it is scaling up. As we look ahead, commercial distributed ledger technology, or DLT, generative AI, and quantum computing are emerging over the next decade to drive this next phase of disruption in financial services. There are many questions the financial sector will have to answer as part of this process. How do we move forward and yet protect ourselves against the risks that will come with this evolution? How should we address the opportunity and challenges in virtual assets that bind value and ownership together in one digital token that can be moved around instantaneously around the world? How do we use AI to enhance financial efficiency without setting off crashes? And for all of us seated here today, what role do we need to play ensuring a digital future that is safe, secure, and sustainable? As we consider these future possibilities, we must stay grounded in present realities. At the end of the day, we have at one end 1.4 billion people who still do not have bank accounts. And at the other extreme, we have NFT traders buying and selling monkey gifts. True blockchain can transform the financial industry. Yet at the same time, some cryptocurrencies which have relied on this technology have become flashpoints for volatility and speculative fraud. There has also been an explosion of fraud through complicated new channels, which are hard for investors and regulators alike to wrap their heads around. So there is some skepticism about digitization. As an example, BCG recently in one of the reports estimated that less than a third of the world's largest banks are investing adequately in digital financial ecosystems. In Asia, some financial institutions still use fax machines, ink stamps, which are due to obsolete regulatory standards. So while security is always a concern when implementing new technologies and workflows, this kind of conservatism is incompatible with the way that the evolution is going to happen. And HSBC as a bank, we share the fact that this complacency is not affordable for us as a bank, but also for financial services put together. We at HSBC know that banks cannot sit on the sidelines while innovation happens and changes the market. We hear our investors, our business partners, and our customers demanding transformation. And we have committed to deliver a digital evolution, and we have put a lot of money where our mouth is. And it is starting to pay off. I'm pleased to say that over the last 4 years, as we've evolved our technology, we have seen it come through in our results and in the return on tangible equity that has moved from single digits to now mid-teens. At the end of the day, banking is about helping our customers find new opportunities while anticipating and managing financial risk. These functions are critical for the stability of the world economy. With that in mind, let me walk you through how HSBC and Hong Kong are working together to make this city the world's preeminent FinTech center. Firstly, I'd like to just start with some reflection on Hong Kong's history. At the heart of Hong Kong is its entrepreneurial spirit. This is evident in the way Hong Kong has evolved and adjusted to complement the global markets which it is especially exposed to, and to the economic development of mainland China. Keep in mind that just about 50 years ago, Hong Kong was best known as a low-cost factory town, churning out apparel. Now, manufacturing is roughly 1% of the city's output, and most Hong Kongers work in the services sector. In reaction to the migration of manufacturing to the mainland during the reform and opening movement, which many Hong Kong companies facilitated, Hong Kong has accelerated the development of other industries, in particular finance, and that has worked out very well. Today, the finance sector is the city's sharpest competitive edge. Hong Kong is still China's only fungible hard currency market, with its own currency explicitly pegged to the US dollar. It is exempted from capital controls applied to onshore renminbi assets. And there is also Hong Kong's role in the one country, two systems arrangement. As an extension of this, Hong Kong is able to experiment with the development of the next generation of the digital economy, including blockchain-based technologies and crypto. This government has made technology transformation a linchpin of its broader economic strategy to create new wealth and new jobs for the young in Hong Kong. 700 million Hong Kong dollars has already been allocated to the project on the back of substantial policy support. Therefore, Hong Kong, which is already a global international financial hub, is now positioned to become the world's leading top digital finance hub too. Such an elevation and evolution will naturally play off in this city in our view. And because this sophisticated market is deeply integrated with the world's second largest economy, who also is the world's largest exporter, Hong Kong's leadership in FinTech will also benefit markets across Asia and the rest of the world, given the scale of the trade and investment flows that link Hong Kong with the rest of the world. So HSBC is already playing a big role in driving Hong Kong forward. We have 300,000 corporate customers today who bank with us in Hong Kong. We are a leading trade finance and foreign exchange bank here, with roughly about 1/5 market share in the city. Supporting Hong Kong's ambition fits with our competitive advantage and our purpose as a truly international bank. A full spectrum finance industry in Hong Kong will mean that businesses can export and import through a digitally enabled global network. And this will require some initiatives that need to be taken, and I'll lay out some of them. First and foremost, we believe that the establishment of a comprehensive regulatory framework is a prerequisite, especially when retail investors are involved. We believe the principle of same activity, same risk, same regulation is critical. If it acts like a commodity or it acts like an equity, it should be treated as such. But developing specific guidelines requires understanding of the underlying technology, the upsides and the downsides of the same. Some of these technologies have yet to mature. So we are working with financial regulators here, including the HKMA and the SFC, on refining this framework. But in the meantime, we are also building the foundations of an ecosystem. For starters, the Hong Kong University of Science and Technology and HSBC have joined hands to deepen FinTech talent development. We are exploring how to apply and monetize solutions ranging from artificial intelligence to quantum computing. Then there are areas where we lead and which is within our wheelhouse. Trade finance is an example. It's a massive market. The aggregate annual volume of domestic and international trade credit today stands at about $35 trillion US. We are the world's largest trade finance bank, as well as a major facilitator of payments related to that trade. In fact, in Asia, today we process 1 trade transaction per second for our customers. Much of the world's trade finance today remains trapped in paperwork. This aggravates information mismatches between counterparties, inflates costs, and increases risk. These are the barriers that small merchants have to face up to as they try to grow their businesses. So digitizing trade finance means greater financial inclusion by lowering costs and increasing accessibility for these merchants. Digital money, backed by central banks or by commercial banks, is an exciting horizon for us, given the potential to increase transparency and efficiency. So are other forms like tokenized deposits, for example. These tokens in asset form have the potential for fractional ownership, allowing small investors to purchase small parts of a whole. Whether it's a corporate bond, a batch of commodities, a new hospital, or a ski lodge in Hokkaido. Today, the HKMA is actively testing the CBDC functions, from payments to tokenized deposits and settlement. And I'm proud to say that HSBC has continuously supported the MA's eHKD pilot program since 2017. We are also helping with the round of trials of the Bank of China's digital renminbi project, or the eCNY in Hong Kong and in the mainland. In fact, just a month ago at the Asian Games in Hangzhou, Hong Kong athletes could download the eCNY mobile app and make purchases at the athletes' village through our HK Fast Payment System, or the FPS. And HSBC was able to support the connectivity together with other banks like Hang Seng, ICBC, and Bank of China. We are also actively developing solutions for institutional investors. HSBC Orion is one example of that, a platform that uses blockchain to facilitate the issuance and transfer of digital bonds. The European Investment Bank launched its first sterling digital bond on HSBC Orion in Europe earlier this year, and we are gradually rolling this service out in other markets and in more currencies. And we will be doing something in Hong Kong soon as well. Issuing native digital assets is important for the development of capital markets in our view, as we move from an analog world to a digital world in the capital market space. Ultimately, we are committed to offering our institutional customers a complete set of solutions, which is why last evening we announced an approach to tokenizing gold, complementing what we are already doing for bonds. Now, one can't talk about the digital economy without covering AI, and this is something that we've embraced over the last few years, and it is having a significant impact on the industry. We are today deploying AI across the board, both from a risk analysis standpoint, but for the creation of new tradable financial products as well, and for trading management. At our booth here, you can see our proprietary AI, HSBC AI Markets tool, which uses similar technology to ChatGPT to help our institutional investors navigate financial markets using both real-time and historical trading data sets. On quantum computing, our innovation team is working with a number of partners. This is an area that can revolutionize financial services in areas like portfolio optimization, fraud detection, and cybersecurity. McKinsey estimates that quantum computing would be a $1.3 trillion industry by 2035, and 2/3 of that will come from finance. Today, we are moving ahead on this technology by joining forces with leading tech providers and research labs to explore the potential for applications to real-world problems. We are also building a dedicated quantum research team at HSBC to formalize our use cases and for deep research projects. We are developing patents and products. So to summarize, HSBC is expending a lot of energy in deploying capital to ensure that we are on top of the latest developments and that we stay on top of our customer needs and meet them. Now, I'm not a futurologist, I'm not a techie, I'm a banker, and I have been that for 30 years. And I've experienced many business and tech cycles through my career. Right? We saw the global financial crisis, we saw what happened through a period of sustained low interest rates, when investors became accustomed to technology entrepreneurs invading and disrupting established industry players. So I'm often asked the question, can a bank like HSBC compete in the future against aspiring disruptors? Could a purely digital bank or some super app make traditional banks like us obsolete? I doubt it. FinTech startups and online lenders remain critical to the digital evolution. They have forced banks like us to change for the better. They continue to do so, and as a global bank, we will continue to tap into this decentralized innovation pool. At the same time, everything that we've seen in the past few years has reinforced the need for a traditional role that banking plays. We are both a consumer and a developer of technology, but first and foremost, we are proudly a bank. And our business is based on relationships that provide liquidity and help create wealth for our clients and our shareholders. From a government or a regulator perspective, recent developments have reinforced the importance of banking stability. Risk buffers have their upsides and downsides, of course, but when Silicon Valley Bank ran into trouble, it was HSBC and other traditional banks that had the cash on hand to step in. We plan to use the UK operations of SVB as the kernel for our new HSBC Innovation Banking service. This service will formally open its doors in Hong Kong before the year end. So in my view, in this new era of high inflation, high barriers to credit, banks like us are ideal partners for many fintech companies. We have the trust of our customers, we have the breadth of business that can support fintechs as they grow, help them meet regulatory compliance, and managing the scope of risk that they can take on. There is a model of coexistence where we become the users of their services and we can serve as platforms for their products and solutions across our network. Such healthy partnerships are also important to regulators around the world so that they can see innovation, bring costs down for the end consumer, and improve financial inclusion. So to conclude, we stand at the foothills of a new era. The digital economy today in Asia gained 4 percentage points between 2010 to 2020. It is now worth over $2 trillion US. But the next 10 years, we are going to see industrial movement up that slope. This will invigorate our industry, the city of Hong Kong, and the global economy. I, for one, and my team are really looking forward to this climb. Thank you.